Hi everyone, let's look at an update of the low time frame bullish and bearish scenario, starting with my bearish scenario where I think this is an alternative for me at the moment, where we're looking for a 1-2, 1-2 and then a bigger 3 to the downside. Now, the reason that this for me at the moment looks to be an alternative is first of all this yellow wave 2 and then a 1-2 retraced to the 886, which is a rare target for a wave 2 and not a common target at all. And if this is a wave 3 in a bigger wave 3, you really want to see volume kicking in and you want to see a very impulsive move to the downside, right? But as it stands at the moment, looking at the structure we have, yes, volume increased in literally one candle over here, but then it kind of dried up and the volume also started to slow down. So at the moment, that is the reason that for me, this is an alternative scenario, because if this is a wave 3 of a bigger wave 3, you really want to see price tank to the downside and go much lower, where the minimum target for this wave 3 in yellow over here, if this is then a 1-2, 1-2, for then a big 3, really the minimum target is the 1.618, but in a very 1-2, 1-2 bearish scenario, usually that wave 3 would extend to much deeper prices, where you can see some more targets over here, but literally the minimum is the 1.618 and 28.7k, which also has nice confluence with the target box that I have here between 28.2k and 27.4k. Now if you then zoom into the structure that we had to the downside and the price action that we got today as well, I currently have this labeled in white as a 1-2, then a 3, potentially wave 4 not yet in, and then eventually a wave 5. The reason that for me this is a wave 3 over here is that we had a couple of waves over here, potentially a 1-2, 1-2 or a 1-2. Doesn't really matter, just a 5-wave move inside this wave 3. Now, if this is a wave 4 and not over here, so imagine that this wave 4 is already in over here. If this would be the wave 4, then for me it is very short compared to wave 2 and very short compared to the corresponding wave 3. So a wave 4 not only has a relationship based on alternation with a wave 2, but also with the corresponding wave 3, which as you can see is quite long. So this being a wave 4, quite unlikely in my opinion. I would prefer this to be then the first structure of a wave 4, like an A wave for example, then a 3-wave B in an expanding flat, and then looking for a C to the upside, where for me the 382 is an interesting target, mainly because we also have a daily naked point of control there for one of the days, a couple of days ago, at 29.3k. So this level is very interesting for then potentially in this bearish scenario, this being the high of a wave 4, and then another move to the downside for wave 5, where we can then enter this target box where we have a couple of interesting confluences. So this daily naked point of control at 28.3k has already been hit now, so we can kind of remove that from the chart, because now it's been, well, hit. So, you know, it's invalidated now. And then we have another daily naked point of control at 27.9k. However, that's not the only thing. Down here, we also have the range point of control of the range that we have been in for a couple of weeks over here. And we also have a weekly naked point of control at 27.925. So especially the bottom of this target box is a very important area for potentially then the end of this yellow wave 3. Therefore also of course then the white 5, because then this is a 4, 5, end of the yellow 3. And then after that yellow 3 you actually expect another 4 in yellow, before then another 5 to the downside, which then ends the blue 3, you know, much deeper prices. Let's just keep it simple. So eventually you just expect much deeper prices, but as it stands now with the price action we're seeing, as mentioned, it's currently a little bit of an alternative scenario. If price would manage to push to the upside and actually hit this area over here at 29.7k, then for me this currently is invalidated. So especially if this is still a wave 4, you don't want to see price close candles above the 0.5 taken from the high of 2 to the low of 3 with the Fibonacci's over here. So yeah, currently my invalidation would be 29.7k for this very bearish scenario. Finally, one important thing, don't catch a 3 is something that I learned the hard way in the past, is that you never know how far a wave 3 might potentially go, because usually, as mentioned, these are very impulsive and can extend massively. So you don't want to just ladder in certain longs in this case against the wave 3, because it could just dump, and if you're laddering your longs for good luck, well, you know, you just get stop loss, stop loss, stop loss, stop loss, and those are the people that always try to trade against the trend, and especially in the wave 3 you do not want to do that. So yeah, that's why there is definitely no trading setup over here at the moment. I first want to see what price is going to do over here in this area. Maybe it's coming down immediately, maybe it goes up first and then down, whatever it is. I need more information to eventually make a plan. If we then go to the more bullish scenario, we're looking, let's zoom out a little bit, for this to be a WXY. So a three-wave structure, zigzag in this wave W, another zigzag over here, very steep in this wave X, and then we're looking for this wave Y. Now the fib times that you see over here, the 1-to-1 and the 1.618, is basically the time it took to develop wave W compared to then a potential wave Y. So the 1-to-1 over here is literally the time it took from the beginning to the end of W, compared to then the start of Y to potentially the end of Y, right? So comparing the two, usually wave W and wave Y have some sort of a time relationship as well. That's why I have it on the chart. Now, as you can see, this is then the, or should be, the first part of this wave Y. So if we're looking for a wave Y, we're looking for a three-wave structure, as a WXY is a 3, 3, and then another three-wave move. What we have over here cannot be an ABC. It cannot be an ABC. It cannot be a 3, 3, 5 wave move, and that's it. Why? Because if this is a wave B and then an ABC, this wave B did not retrace high enough, because a wave B has to retrace at least 0.9 or 90% of wave A. And that is the red line that you see over here. Now, John in the comments also mentioned he has 88.7% as a retracement minimum for a wave B, but nonetheless 0.9 or 887, it's both up here. And as you can see, if this is a wave B and then an A, B, and this being a C, it simply did not reach the minimum requirement for wave C to then be an impulse. So this has to be then some sort of a WXY in this bullish scenario, right? So we're then looking for a three-wave, and another three-wave move, where this can be an impulse, yes, absolutely, but then we expect a correction to the upside in 3 waves and then another impulsive move to the downside. So if we then zoom in to this impulsive move to the downside, in this particular case, I have then a 1, 2, 3, 4, and maybe wave 5 is ending over here, and this could be the start of a move to the upside, like the start of potentially the correction phase, where this is a 5-wave structure, and then you have this as an ABC, which then is a bigger A, for example. Then you get a little bit of a retracement or whatever correction, and then eventually another move to the upside for then eventually wave C. So then you have an A, B, C. However, it can also be, and that is why I also don't have any setup here at the moment, that price is just going to go lower and hit the target for, box first before it is going to retrace for then the potential plan to the downside. Now, the thing is that the deeper this A wave goes, and then an A, B, C in this wave Y, the higher wave B has to retrace for eventually ending somewhere inside the target box, or maybe just below of wave Y, because the target box that you see over here, this is the most common target area for a wave Y, and it's basically the trend-based sub-extension taken from the high to the low of W to the high of wave X. Has a little bit of confluence with the blue target box as well, but as you can see, this first move already retraced very, very deep, already basically into the target area for a wave Y, and if this is only the first wave, it is a very, very deep first wave, which means that a wave B has to retrace to at least the 786, if not the 886. And for me, the 786 retracement over here is interesting, taken from the high to the low that we have at the moment, because we also have a order block over here besides the 786, and it also is the upper side of this gap, because I think if price is going to manage to enter this gap area over here, there is not much resistance, and it can just shoot up to the upside, hit the 786 and the order block to eventually range here for a little bit and then move to the downside inside this wave Y to then finish an A, B, and then eventually a wave C to maybe also hit, I mean, this is the most common target area for a wave Y, but I do have to show you this It is not the only target area for a wave. Why? Because the maximum target is the 1.618 all the way at 27.3K, which is a rare target, but it is still one to keep in mind. So of course, in this scenario, the price action down to a wave Y and then an A, B, and then C can go down or below the 1.236, and it can also then hit the higher time frame levels we have over here with the range point of control and the weekly naked point of control. Now, important for me, to be honest, is that I prefer not to see price over here hit these levels, because these are quite big support levels. And if price is now going to go down, hit these levels and basically invalidate, or well, you know, if price is going to touch these levels, they become weaker. And if price then goes up and down again, there is less probability price is going to hold over here. So preferably price is first moving to the upside instead of going down to hit these levels, preferably first to the upside and then eventually to the downside to hit these levels for some extra support, and then we'll see what happens, right? So yeah, that is something like a little nugget in my opinion. I think it's quite important. The area that we have over here, it's quite big support as well, but we have to wait and see what happens. Now, if we then zoom into this structure, and also I will look into what happened today as well on the micro in the 5-minute as well as the CVD. But potentially what we are having over here is a 3-wave A, then eventually some sort of a 3-wave in B, where the most common target area for an expanded flat B is this structure over here. So the 1.236 and the 1.38. And then we expect a wave C to the upside, where the most common target is over here. Now in the bearish scenario, you know that my 1, 2, 3 ended here, potentially 4 and 5. That is also a possibility in this bullish scenario, where wave A is going to end lower. As mentioned, might not be preferred to hit these areas down here, but it is a possibility. If we then look at the lower time frames, and that's also the reason why I don't have any potential trading setup based on Elliott Waves, because we have to be patient, right? Patience is very, very important with Elliott Waves and trading in general, by the way. So what happened today, right? What happened over here today? Let's have a look as well. Because in my previous video, I mentioned when, what was it? Price was ranging here somewhere. I don't know exactly. I said, yo, I'm not liking the trading setup that we had, right? We had a potential trading setup, which was something like this and then traded to the upside. But after seeing the structure that was happening over here, I said, yo, I'm not feeling confident. I don't like it. We have a bearish divergence, another bearish divergence. And then it kind of invalidates for me the bullish divergence we had. So I'm like, yo, this is not looking very good. And if you are potentially trading something like this and something goes against your feelings, it's better to go out, either put your stop loss break even, just exit the trade at maybe a little bit of a profit, or exit the trade at a minimum loss. But whenever you're like, yeah, you know, I'm not feeling it, you just get out. You know, there's always going to be a next opportunity. So let's look at what happened over here and then what happened over here as well, while price is going to the downside just a little bit, right? So if we go to the CVD chart, this is what we're looking at. So the low that you see over here is this low, right? And then you have this one and this one, which are the two on the right. So if we then look at what we had earlier today, we had over here a bearish divergence in yellow, lower high, but a higher high on the yellow CVD, barely, but it is there. And then on the 5-minute, which we are on right now, on the blue line, you can see again, we had a lower high over here. Let me actually put this a little bit taller. A lower high, but a higher high on the blue CVD. And that is what I've shown in a previous update, where I said, yeah, I'm not feeling it. Even though you might see some bullish divergence between this low and these lows over here, I said, yeah, this is not for me, right? Don't really like to see this stuff. So eventually what happened is that price moved to the downside and took the lows, right? So basically all the bullish divergences and stuff, everything immediately invalidated. Then price moved to the upside, as you can see as well. But then what happened once more is that we create lower highs, but as you can see with the CVD, we're creating equal highs or maybe even a little bit bearish divergences on the yellow line here at the moment. So even though there's a lower high, there's equal highs, if not a little bit higher highs on the yellow CVD. So again, some bearish divergences kicking in. And the biggest one, where if you've seen this and you are somehow long for whatever reason, this was definitely a red flag, is this candle over here. The moment this happened, you can see a spike coming in the CVD, which means that someone bought here like the CVD is market buys, so or someone got stopped out with a short, which also is a buy order, of course, but a big buy at least, whatever it is, and the CVD basically spiked to the upside, meaning it got fully absorbed, creates bearish divergences with the whole shebang up here, and then poof, goes to the downside. So yeah, very interesting stuff happening on the lower time frames. It's, I think, very important and also good to learn on how to read the CVD. And yeah, currently price moved down, took the low once again, and now we have to wait and see what happens, because no one knows what is going to happen. And yeah, we'll see what happens, right? I told you everything I wanted to tell you, so I hope this video was helpful or valuable to you. Please check out the macro and high time frame video if you're interested. And for now, thanks for watching and subscribing, and I will see you at the next one. Bye bye.